Saurabh Mukherjea to discuss RBI's decision to transfer 1.76 lakh crores to the government, and what does it mean, from an equity market standpoint in terms of the overall sentiment. Saurabh, thanks very much for taking out the time. Very good morning to you. Yesterday was, a booster shot, and today yet again another one that has come our way. So, do you feel that now, at least from index standpoint, the lower end is capped?
I think, look, we're going to have an extended relief rally. Clearly, there will be more announcements from the government. It's super obvious that there will be announcements in the coming few days as to how the government intends to spend this extra 80,000 crore that they're getting. That's nearly 0.7% of GDP. That's an unprecedented fiscal win from what I know of Indian economic history. So clearly, there will be more announcements from the government on the fiscal stimulus, and therefore, the relief rally which began yesterday should sustain. Now, can this lift the economy out of the funk? Can this resurrect the NBFC sector? I think those are bigger questions. Those are more meaningful questions that I think we'll have to answer in the coming days and weeks. But in the near term, rest of this week, next week, we should see an extension of the relief rally which began yesterday.
The other aspect, obviously, are being, the global cues, which are crucial. Yesterday morning, when we did the morning show, it was all hands off with regards to the trade truce. Now, once again, murmur and chatter. Yesterday, mid-afternoon session saw some more conversation around what could happen and whether or not, China is more bent towards getting some renegotiations going. Do you feel that right now, the global setup is more prominent than the domestic setup?
Look, I think the global piece has been so subdued over the last year or so. Difficult to see how it can do incremental damage for us. As it is, the US-China trade war is now in its second year. With yield curves inverted in the West, the consensus view has been for the last 6 months that America is heading into a recession. Germany seems to have already entered the recession. So it's difficult to see how further negativity in the West can hurt us further. The main benefit, I reckon, of out of the US-China trade war will be a weaker yuan, which in turn means a weaker rupee, which in turn means relief for Indian exporters. So I'm not so sure too many FIIs or DIIs are going to lose sleep about global cues. They'll be trying to discern as to is this the beginning of an economic recovery in India, and therefore, as you were yourself highlighting, Davina, is this the turn in the Indian stock market? So those are big questions. I'm not sure I have the answers to them today, but I think that's what the big focus will be over the coming weeks and months, given the intent that the government has to turn around the economic tide.
Saurabh, morning. You look at this math a lot closely. Do you reckon the fears of a large fisc slippage are now comfortably taken off, and that monkey is off the back?
Look, an 80,000 crore bonanza for the bond market to then say, well, I know we're still worried about fiscal slippage. So I think bond yield should, and I think I agree with you that I think the fiscal slippage fears are off the table. More importantly, what that is an interesting prospect. See, what was happening is because tax revenues were weak, the government was borrowing heavily from not just the bond market, but the small savings scheme as well. That in turn was making it hard for banks to cut their deposit rates, which meant the banks couldn't cut their lending rates. So if the government stops crowding out private sector borrowing courtesy the bonanza, we could see the banks passing on the RBI repo rate cuts much more rapidly. Turn could signal the beginning of an economic recovery. So this bonanza, 80,000 crore bonanza, I think has far-reaching implications. If used wisely, this could turn around the economic tide, and I think those are the details we're waiting to hear from the government in the coming days and weeks. How will they use this money? What will this do to the government's borrowing plan for the rest of the year? We badly need the government to borrow less money from the financial system, because that will then give the banks the chance to cut their deposit rates and hence their lending rates.
So, final question: are you adding on to more positions confidently, or are you still of the belief that maybe staggering it out because of the uncertainty might be a better process?
We've been buying every day for the last, I think, 6 months or so. Every single day they bought.
Okay, that answers. Great. Saurabh, thanks so much for this very quick time. Appreciate it.